This video will examine actual versus applied manufacturing overhead. First, what is manufacturing overhead? It includes all manufacturing costs except direct material, direct labor. So these are indirect costs, such as indirect material costs, indirect labor costs, and indirect means costs are not identified with or traced to a cost object. Some examples include utilities, salaries of production supervisor, property taxes, insurance, and depreciation on the factory building. Actual manufacturing overhead is tracked and recorded. How is that done? To illustrate the recording of factory overhead, let's take a company that manufactures sofa, for example. Assume it occurs $4,600 of overhead in December. So we record a debit $4,600. And this includes $500 of indirect materials like glue and sandpaper. $2,000 of indirect labor like production supervisor, not assembly worker. That would be direct labor. Utilities, $900. Factory depreciation, $1,200. So again, what we have here is actual manufacturing overhead. Remember that factory overhead is different from direct labor and direct materials in that it is indirectly related to the jobs. That is, factory overhead costs cannot be identified with or traced to a specific job. For this reason, factory overhead costs are allocated to jobs. Companies applied manufacturing overhead using predetermined factory overhead rate. Companies do not know the actual, so they must estimate, and they use predetermined factory overhead rate. It's something that you can see in another video. Know that if company wait until all overhead costs were known at the end of the period, the allocated factory overhead would be accurate, but not timely. Therefore, they need to use estimated reports so manager could adjust the manufacturing methods or product pricing accordingly. Again, they must estimate manufacturing overhead rate. It's something like, for example, $5 per direct labor hour and $5 per machine hour, depending on the factory overhead activity. Okay? These rates are applied to work in process. Let's say direct labor hours is 350 hours and machine hours is 500 hours, totaling 850 hours, and $5 per hour is the rate. So $5 per hour times 850 hours equals 4,250. The journal entry to applied overhead is as follows. A debit to WIP, work in process, 4,250, and a credit to factory overhead. So we have actual of 4,600, a debit, and later the applied overhead is 4,250. We have an ending balance on a debit side of $350. This is considered to be under applied, right? Actual with 4,600, but the applied was only 4,250. Hence, 350 is under applied. The applied overhead is less than the actual overhead incurred. The factory overhead account will have a debit balance, in this case 350, and this debit balance is called under applied factory overhead or under absorbed factory overhead. If the balance in factory overhead either under applied or over applied becomes large, the balance and related overhead rate should be investigated.